JSServices has the JS desktop. Here's a glance at what that looks like, and again, it covers a matrix of 40 plus symbols each and every day for you to follow. John tracks one of these for us pre-market into the 9 o'clock hour, and tries to put us on the trail of something that is either in play or continues to be in play. And so, John, with that, I'll pass the presentation over to you and let you take it from there. John, again, thank you for joining us today, as always.
Thanks, Jim. Hello, everyone. There we go. So we've been following crude oil. We're going to stick with the program and take a look at that today. That market is in a has been in the bear trend, is still in the bear trend. But what's interesting about today's action in crude oil is the structure of it. So bear trend, lower move lows, lower move highs. Doesn't mean a bear trend that the market goes linear. You know, there definitely are rallies in a bear trend. They're called corrective rallies. They could last a few minutes, they could last a few days, and we can identify when we're going to see these corrective turns through the structure of the market. And so today, our sentiment bias, which comes in at 29.17, is at our what we call our directional, so kind of the midpoint of our critical range. And whenever our market's in a trend state and we have this sentiment bias in this position, it's really a kind of a power stance where the market is pressed and it should just go. And if it doesn't go, we can anticipate a corrective hedge theme. You know, markets are always transitioning from one state to the next. We don't know when that transition is going to occur, but we do know where they occur based on their structure. And so today in the crude oil, and this is a daily chart here, and we were following crude oil yesterday, we had that corrective move. We were looking for a bounce. We were looking for that exhaustive reversal bounce. They really didn't give it to us. They kind of just sat there and then they turned overnight, and they gave us a trigger when they got back above this 29.17 level, and so this is negating this bear trend. So the structure of the bear trend today is broken, and we're currently in this hedge theme. So let's look at an intraday chart. So here's yesterday's action that we were looking at. And you know, we had the breakdown. We broke down to our support area. We didn't get that flush that we were looking for, that emotional turn, that flush. And overnight, they started to try to press into that again, same kind of support, and they broke out to the upside. And they broke out above this this key structure point. They've already tested this level here. So this is the kind of confirmation point for any follow through to the upside. So any corrective trades can be choppy, they can be real sideways, and sometimes they can, you know, start to get linear and get real excited. So we're going to let me put a little more detail on this. You know, along with the major structure points, you know, this price map helps to identify the segment moves the market's trading in. So we have some other minor levels. And if this thing does take off and we do get a corrective shift and we get a break in this structure, this market will have the potential to run it up to, let's say, 33.25. So that's the big macro picture view of the market. And then we have, surrounding these major structure points, we have a micro view and within the variance around this structure. And we can really see that better within the order book. Here's the top, here's our figure is at 29.17, but then we have what we call an alert distance, and you can see that on the JS notes column here. It's the top of the alert distance of this figure. And then this area, this smaller area, is what we call our variance. And so this is really that kind of optimal entry areas within the variance, and then the alert distance is, you know, signal acceptance. So, and in this example here, we can use the order book to help identify how far will it press into that area. And here we see that, you know, the market had some resting paper, it came down, and it stabilized at the, you know, at the top of this alert distance. And so now are we going to extend? You know, one thing I like to use the Bookmap for is we can see all this resting paper here, putting a pretty decent lid on this structure point. So we have a metric here. We need to, for this market to kind of engage this kind of a new impulse higher, you know, to really start to extend, you know, we really need to get back above this metric. And it's nice when you see price confluence with market structure with the book. And so we've got some definition here. We've got resting paper. This is kind of our hurdle that we need to overcome at the moment. So what do we see in the book? We see a little paper starting to push up. We really need to see these buyers get aggressive and come up here. Otherwise, we still have a lot of dark. So you could easily have some, this classic crude oil choppy action, and the book's telling us that, yeah, we could come down and make a new move low, and it's still good. This is another great thing about Bookmap is that, if you're just looking at price, I'm looking at this low and I'm saying, okay, I'm long the market, I want to go. And if we have one of those crazy squeezes and they squeeze it down, they take out the stops here, well, they're breaking right into structure, right into our optimal entry area, and that's supported by the book. So it gives you a lot more clarity to really what's going on. It shows you how some of this intraday support and resistance can be so porous. When you see alignment with market structure, so the structure of the market state, and you get that confluence with price action and the order book, that's really the tell. So I'm going to blow this up a little bit. I'm going to change my dots. Jim, what crude oil? What are you using for your dots? Like 250?
No, I don't have any filtration right now. I'm just looking at all the action, and what I'm really looking for is potential exhaustion here, like you're saying. But we kind of had that return back to the scene of the crime there. If you zoom out a little bit, you'll notice that we kind of broke and swept the book from this 29.73 to 75 area. This last little dip kind of came back down and kind of validated that area. So this is the area where I would look for the book to flip and start to light up underneath. Let's look to test this even figure up above. If not, we're going to need to, we still have more work. That's your choppy scenario where there's still a lot more work left to do. And so those are really the two areas or the 2 points that I see right here. I see that, again, we kind of swept that book up through this 29.72 to 75 level, tested the highs up here around this 90 to 95 level, and then came back and returned to the scene of the crime in what technicians refer to as a broadening wedge pattern. And now we're pressing up against the ceiling. The ceiling is very clearly defined by the CR level in JS notes column, as well as you see the liquidity in the book here. And so, we're going to need to see that book flip. We're going to need to see them get aggressive. We're going to need to see buyers willing to pay a higher price for this. Else I think we're just kind of in that sideways scenario. But like you say, given that longer time frame view and perspective, what we're looking at a full APMD move up to 31 and change. Is that correct?
Yeah. So absolutely. Sticking with the underlying theme, understanding that the bear trend's been broken. Typically, if this market is going to rotate, and if we're going to have an interior rotational day, it's not going to take out the CR plus. This high should have held, and we should have rotated back down to this area and had a rotational day. The fact that we made a new move high is important. We did reject, which is normal, but we're holding above this 29.17, this whole variance. They could easily come back down here. You see the booklet up here. As Jim said, we want to see these buyers start to shift up and get aggressive. Otherwise we could easily come back down to this liquidity. But this is important. We've got a little bit of a fight going on here, and we'll see who wins. We never know when the market's going to make a move. All we can do is let the order book tell us when that's going to happen. And if we do start taking out this paper, we do start to see this paper shift up, that's going to be the tell that we're ready to engage. And if we engage, we're going to want to see that market build positive price structure. Higher move highs, higher move lows, and just run it. And that'll be the tell that we're in for a move. And you'll see that in the book, and the book will support it. And at the moment, it's not doing that. We still have, we still have, the big buyers down here. This guy's shifted up, so we've kind of tightened that range a little bit. Within here, it's making a move. You want to think of crude oil today as kind of like a balloon underwater. If it does try to push down, it's going to struggle. And it's going to pop back up. It may be done. It may be ready to go. Maybe we're going to get another push. But you'll use the order book to really give you that clarity of when it's time to engage.
Mm-hmm. Yeah, again, clear liquidity above at that even number. Let's see if we can attack that. Let's see if we attack that with a lot of participants and people are willing to pay that higher price. Otherwise, probably gonna have to dip down to the well, try to find some more momentum. But according to the state of the market in this hedge strategy theme, looking for that 31.11 area above if we can find acceptance, and we're already there, so could chop around a little bit, but again, just stay on your toes. Let's look for a challenge of this 30 area here, and let's see if we can make quick work of this, or maybe not. Time will certainly tell.
Get this to push up. Here we go. Okay. Let's get these guys to shift up. A nice tell is when they do start to push through, that we see this order book really shift up and support it. And you can use these variances. Just because this is the figure, just as we've seen here, it doesn't. That's a valid signal acceptance area. So you've got this price structure here, and we'd like to see this kind of start to shift up. And we can kind of shrink this down. We don't really have a lot of clarity to the upside right now, which is kind of good. It's sticking with that theme. Just stick with the theme and see, and you kind of have your mantra that if this thing starts to accelerate, where can it go? Well, it can run up to 31.83, 33.25, and watch price structure, watch the order book. See the support of the order book. Where is it? If you get a lot of dark area here, know what you're vulnerable to, but know that if you do, it's just buy low, sell high, right? So you get this, you get a profit surge, you take it, you get a shift back to the order book, you regroup, but you stick with the theme.
Yep, sounds good, Johnny. I'm sticking with the theme, my friend.
Yep. Good luck, everyone.
Good luck, traders. Thanks again. Join us again tomorrow as we'll do this again, 9:15 Central. And again, thank you, traders. Look forward to you joining us again tomorrow. Talk again soon.
Thank you for your interest in JS Services. I encourage you to visit our website at jsservices.trade and sign up for a demo of our application, and reach out to us at info@jsservices.com with any feedback, comments, or questions. Look forward to working with you. Good trading.